Hello, everyone, and thank you for joining today's session on TTI's personal tax scenario and corporate tax scenario session. My name is Jay Goodis. I'm the CEO and co-founder of Tax Templates, Inc. The goal of today is to spend about 20 to 25 minutes going through these two solutions. And if you have any questions, you can use the Q&A function in the application, and I'll either answer them during the session or immediately afterwards. All right, so let's just jump right in. All right, so we're going to start with the personal tax scenario worksheet. And before we walk through the worksheet, I just want to remind everybody about a few key elements inside TTI solutions. First off, wherever you see these grayish green color cells, these are the optional input cells. They will be the ones that we use the most. Wherever you see any gray color cells, these are locked, and they're locked to protect the integrity of the formula. The last thing we want is somebody accidentally overriding something that will completely change the answer. Now, next to each of these cells, we have our built-in review ticks. I'll be using these today to draw your eyes towards certain numbers, but these can be used throughout your practice. We use O for correct, X for incorrect, Q for question, M for manager, and P for partner. Now, next to these little boxes, you have these yellow cells, and these are note cells. So this is great opportunity to write any notes next to any of the items you enter, or for anyone who might be an Excel enthusiast, you can also use these to build any formulas. One of the benefits of using Excel as a platform is we can leverage everything that it's able to do. All right, well, when I put in the $100,000 here, you might have noticed some red pop up on the screen. And this is TTI's error guide. When you see red, it means there's something wrong or there's something that we need to do. So if you go to the top left and you see where it says enter province, this is actually a link. So if I click the link, it will take me to the row to complete. I can just enter in the province for the client, and then you will see that the error guide will go away. All right, within the worksheet, we also have lots of links to help you navigate much smoother, and I highly recommend using these. So if you want to work within the worksheet and I want to go down to dependents, I can just click the dependents link. If I want to go to carry forwards, I can click the carry forwards link. So really recommend using these when you're working through TTI's workbook so you can operate more efficiently. The links on the left, these will take you to other tabs in the workbook. All right, another thing with all of TTI's worksheets, they all have YouTube videos. So you can always click the link for a YouTube video series of how to walk through the worksheet like we're doing today. And we'll also talk about the title cells. Whenever you see purple title cells, these are the main title cells. If you see a new one, just pretend like you're walking through a doorway. You're in a new section of the worksheet. Okay, the last thing I want to share with you before we get started is we have our view buttons at the top. So whenever you open up a TTI worksheet, it is defaulted to the minimal view. And what that means is we're showing you about 80% of the items that we think are going to apply on most files based on what our clients have told us. But if you have more complex situations such as capital gains exemption, foreign income, donation of stock options, additional carry forwards, you can just click the standard view or the advanced view, and you will see a lot more detail populate in the worksheet. All right, so let's get started with this file. And for this file, I'm going to use TTI's completion guide, which is our built-in wizard to take us through the worksheet. So I'm going to click client description, and I'm going to do a file for a client, Mrs. A. When I hit enter, watch what happens to client description. You'll see it's now asking for taxpayer details. It's giving me an instruction of what to complete, and I can go ahead and complete the sections. Let's just use our client for Ontario, born in 1980. Next up, it's asking for taxable income, total income. So let's fill in some income that might apply. Now let's keep it nice and easy today. We'll put in some eligible dividends and perhaps some capital gains. Once those amounts have been entered, we can go on and mark the step as complete to move to the next step of the completion guide. Next step is asking for TOSI income. And the reason this file is asking for TOSI income is we put in some eligible dividends, we put in some capital gains, and it wants to know whether or not those are subject to TOSI. So if that is relevant, we can do that. Otherwise, we can just mark the step as complete and keep moving forward. Next step is carry forward balances. So let's put a few carry forward balances in this file. Maybe we'll put in some net capital losses and maybe some RRSPs. And for the RSPs, I want to make it clear that we have two sections for RSPs. We have RSPs contributions, and we have the RSP deduction limit. We need to complete both. However, if you put in the contribution first, you will see that the deduction limit will automatically populate with the same amount. We've done this to hopefully make it more efficient when you are working through the files. However, if it is different, you can, of course, override the RSP deduction limit to the actual amount. And that's important when we get to the optimization algorithm to ensure we are solving the correct numbers. All right, next up is dependent details. And this is an important section because our worksheets don't just look at things that are on the tax return. We'll look at things that are off the tax return that might be reliant on key numbers such as taxable income or net income. So in this case, if we have a young child and they have some childcare expenses, we might find that for this young child, we might be subject to CCB. So we might get that CCB transfer payment. So we'll see if that comes about in our final results. Once that's completed, we can confirm our net income and taxable income directly in the worksheet. I'll just mark these as complete. And I'll include any tax credits and other amounts. And again, if we hit the advanced view button, we're going to see a lot more credits that apply federally and provincially in those cases. You also have the area here to put in any income tax deducted, any income tax installments. So I'll skip this today, but just be mindful that all that additional detail is there just by clicking the buttons above. And then the last step is to optimize the results. And to do that, I'm going to click the button at the very top, which says Optimize Discretionary Amounts and Reset View. And what this is a proprietary algorithm we developed here at TTI. And what it's going to do is maximize your client's after-tax cash and minimize their tax liability. In this scenario we have in front of us, it's actually a pretty straightforward scenario. We just have some RRSPs and losses and an eligible dependent. So the algorithm is going to claim the full amount. Now, but if we had more complex situations, such as our client being married, we can choose married or common law from the drop-down menu. Then in that case, we would use scenario 1 for spouse A and scenario 2 for spouse B, and then elements such as pension splitting, transfer of dividends, all those things would calculate as well. All right, so now the optimization has run. The other thing that's occurred is the reset view. And if you look at the worksheet right now, all those line items from before are now hidden. So we're only seeing elements that apply specifically to our client. This is really going to streamline review and make it much easier to digest what's going on for your client for that scenario. To see the results for the client, we want to go to the T1 Base Results tab. And we can get there one of two ways. We can click the Base Results link at the very top, or we can click the Base Results tab at the very bottom. And here is where you're going to see both the cash summary and the tax summary. So let's look at the cash summary first. In this scenario, our client has $135,000 of gross cash. We have our transfer payments. That's most likely our CCB. And here's a breakdown of all their taxes and related amounts. We have taxes, CPP, EI, and also those childcare expenses we paid. So based on everything we've entered in the worksheet, our client is going to go home with $112,704 in their jeans. So in all of TTI's worksheets, we're going to look at net cash and taxes. Here's our net cash solution. For the taxes, we can just scroll down and look at the tax summary. And here we'll be able to see the federal taxes, provincial taxes, any refundable credits. And this is what is going to agree to the personal tax return. Now, I've built an example here for 2021, but just please note that the worksheets do go as far forward as 2029. So any known rates are already built into the worksheets. And if you are going ahead and doing a 2022 scenario, all the indexation rates are there already. So assuming there's no changes in federal provincial budgets, then whatever solutions we run for 2022 will match your filing in April of 2023. Now, in this scenario as well, you can see we have our carry forwards. So we're trying to advise our clients what to do next. We have that detail available. And scrolling down, you'll see all the tax detail, both federally and provincially, all key amounts such as AMT, TOSI, rate reductions, health premiums, they're all built in to the solution. And scrolling down further, you'll be able to see the refundable credits and any transfer payments that might apply. Now, right now we've looked at a lot of numbers, but to make worksheets in the tax planning collection a little easier to digest, all of the worksheets come with charts. So we can show our client what we recommend and why, or the results of the scenario. The first one here is our cash chart, and the second chart is the tax chart. And for all of the worksheets, if you go to print any of the worksheets, all the print previews are done for you. I think we've all spent too much time in our careers trying to format Excel to print. In this case, this is my TTI suite, Tax Templates Inc., but your firm should already have your logo on the print previews. If your logo is not there and you'd like to have it on there, please just email it to us at support@taxtemplates.ca, and we're happy to put it on for you. Okay. A key thing I also want to show you about the charts, if I click on the review button, what you're able to do is unprotect the charts. So if you unprotect the chart and you click the funnel button over here in Excel, what you're able to do is deselect the scenarios you're not using. So if you're not using all 8 scenarios, maybe you're just using 3, you can just deselect them, and then you can go ahead and show the client the 3 scenarios that you completed. Okay, another thing I'd like to show you as well, if we go back to the T1 Base tab, is if you are running scenarios for a client for a multi-year plan, you can put in the indexation rates. That will allow you to automatically index all the brackets and credits that should be indexed by whatever amount is put into the solution. So when you are showing a multi-year plan to a client, you're giving them a better sense of what their actual after-tax cash will be in the future. It's hidden now, but underneath date of birth, there is a date of death option as well. So if you have a client and you're working on a terminal scenario, you can put in all the amounts and we'll do all the complex calculations around AMT, net capital losses, and so on. Another thing I want to show you is the flexibility. And this is one of the key features about the personal tax scenario worksheet. Each one of these scenarios operates completely independently. I can change the province, I can change the year end, I can change the taxpayer. Think of it as a tax preparation software that allows you to go back to 2018, as far forward as 2029, and you can change anything you like along the way. So let me show you how that looks. So let's assume taxpayer's name was Mrs. A, and I want to run multiple scenarios for Mrs. A. All I have to do is make Mrs. A's name the same in the other scenario, and you will see it's going to populate with all the data from the scenario before. So let's assume Mrs. A is thinking that maybe they'll earn different amounts of employment income. We can simply go ahead and just change the employment income amounts, and then the worksheet is going to solve the answers, and we can see the results side by side. Let's say Mrs. A is thinking, well, maybe I'm thinking about moving east and I want to go move to Nova Scotia, or maybe I'd like to move west to BC. Well, you can go ahead and change the province. And again, you can see all those results side by side. Perhaps we want to do a multi-year plan for Mrs. A. So we can go to 2022, I can go to 2023. The idea here is you have full flexibility to use these scenarios any which way that you like, and you have up to 8 scenarios in the worksheet to use. So you have 8 scenarios for one individual, and you would have 4 scenarios each if they were a married couple. Okay. So another important feature I want to show you in this worksheet is the T1 marginal tab. So whenever I want to get information back, I just have to hit the minimal view button or any of the view buttons, and we'll be able to see those rows again. And the reason the marginal tab is really important is that right now we have a scenario where a client's got $92,000 of taxable income. And sometimes the client might come to us and say, well, I've got this rental property or a cottage. If I were to sell a rental property or the cottage, what would be the after-tax cash impact of that sale? What's that marginal impact? Or maybe I'm a little bit older and I've got CPP, OAS, and a RIF, and I want to take out more money for my RIF. What will be the tax impact? I want to know, is there an OAS clawback? What's my precise marginal rates going to be? That's the purpose of the T1 marginal tab. So in this case, if I put in $100,000 of proceeds and I hit optimization, what the worksheet is going to do, it's going to calculate the taxpayer's after-tax cash results at the precise marginal rates. So we're not going to start at 0. We're not going to start at $1 million. This is all custom for the taxpayer. So their base income here is $92,410. If I go back to the marginal tab, the T1 marginal tab, you'll see on that $100,000 of proceeds, we have a capital gain of $50,000. We have net capital losses being used. They're going to have an additional $40,000 in taxable income. Well, if we jump to the marginal results tab, we'll be able to see what the results will be on the $40,000 of taxable income. We've got $100,000 in proceeds. Our client is going to have some clawback of their Canada Child Benefit from having that higher net income. And here is their total taxes, again, calculated at the client's precise marginal rates, which again is every dollar above $92,410. Therefore, in this specific scenario, if our client sells this piece of property and they have $100,000 and they want to know how much is going to be left in their jeans, the answer will be $79,614. So again, if you look down below, you'll be able to see all the detail of how we calculate the marginal tax that might apply. And you can see there's refundable balances being lost here as well. You can see all the details down below to see how it is being calculated. And all the charts show the exact same thing. So we're going to show you a marginal cash chart, and we're also going to show you a marginal tax chart. So within the same worksheet, we have the ability to show the client their base results, which is the before. If we just want to run a base scenario, we can. We can show them the marginal results, which is the impact of the marginal scenario. And we can also show them the total, which is bringing everything together. So using the T1 marginal is optional, but we do find it's used a lot by clients because this is something that is common, that clients bring them with another situation of something else that happens. They want to see the tax impact of that specific situation. All right, so again, if we go ahead and click these buttons, you'll see a lot more detail pop up. So you'll see the capital gains reserve, donation of capital property, and a whole lot more. So if you have any questions when you jump into some of those more complex scenarios, or you're looking for something specific in the worksheet, you can feel free to just let us know. All right, so now let's maybe move on to the corporate tax scenario worksheet. And the corporate tax scenario worksheet had a big change in our last update. We added a really key section that many clients were asking for. So I'm going to show you that today. But before I do, I'll just walk you through some of the basics of this worksheet first. This is similar to the personal tax scenario worksheet, except it's for corporations. So you have the same flexibility. You can put OpCo, HoldCo, and SubCo all in one worksheet. You can do a multi-year plan for OpCo in the solution. So again, all that flexibility. So let's go ahead and build a scenario for OpCo. And this is personally one of my favorite worksheets because when I was in public practice, I did a lot of corporate tax planning, and it was very time consuming to jump from schedule 1, 2, 3, 4, 6, 7, 21, and so on. So here's what I'm going to do. I'm just going to create a scenario with several different types of income, some active income, perhaps some investment income, capital gains, and let's also put in some eligible dividends. Once you put in that information, immediately below, you're going to see the taxable income. And if I just jump to the corporate taxes and cash section, we're going to see the results for the taxpayer. So in this specific situation, client has $210,000 of cash. Here is a full breakdown of the client's corporate taxes. We have our Part 1 non-refundable taxes. We have our Part 1 refundable taxes, which is coming from our investment income. We have our Part 4 tax, ERD2H, that's coming from our eligible dividends that's been received. And here is our permanent net provincial tax. So in this scenario, our client's going to have a tax bill of $154,870. Oh, sorry, that's their net cash of $154,875. And immediately beside, we're providing you with a note of the total corporate taxes. So very quickly, we can get this answer for our clients, and especially this time of year, clients might be asking, well, what's my total tax bill going to be based on these estimates? You can open up the worksheet, drop in the numbers, and provide your client with an answer very quickly. Now, if I were to scroll down, there's some other really important information in this worksheet, and that's our carry forwards. When we're doing planning for our client and we're looking at potential remuneration strategies or balances, we need to know what is their NERD2H, what's their ERD2H, their GRIP, and their CDA. So you'll notice in the worksheet, all these balances are provided to you so you can make those decisions efficiently. Another key thing you'll notice in our worksheets is that we also have in the notes section, dividend recommendations. Now, I won't get into the complexity of the NERD2H and the ERD2H and the GRIP, but depending on the balances that you have in each of them, you can go down one of two avenues in order to maximize the client's after-tax cash. Just know that that's built into the optimization that you see in the note cells. So in this case, we want to maximize use of the dividend refunds. We can go ahead and put in $40,000 of eligible dividends and $44,000 of ineligible dividends, and that will clear the full balance. But what about a situation where maybe the client doesn't have enough cash and they really can't pay the full amounts out? Well, our algorithm handles that as well. So I'm going to go ahead and put a cash adjustment into the worksheet just so I can highlight how this works. So in this case, you'll notice here that our client only has $4,875 of cash. And I trust we've been in a scenario before where we pay $10,000 in dividends, we get 38% back. Then we pay 38% in dividends and we get 38% back. And we're in that circle until we get down to zero. Well, that is built directly into the worksheet. So in this case, if I just put in the 7905, you are going to see that the net cash is going to come down to zero. And if we're working with a client that might have a multi-year plan, so I could create OpCo, again, all the information will copy over. I'll put in 2022 so we can see a few cool balances. Well, if I go to my carry forward balances, as you would expect, the ending balance for 1 year becomes the opening balance of the next year. If I go to the active business section, you're going to see we're going to populate the AII, which will grind down our SBD limit if that's applicable. So all those features are built in as well. And if you've got more complex scenarios, you can go ahead and hit standard or advanced view, and you'll be able to do foreign income, multi-jurisdictional, and so on. All right, so the new feature that we released in this worksheet is a new section called Disposition Donation of Capital Property. And this is built specifically when a client is disposing of capital property and we want to see the impacts directly in the worksheet. So the completion guide is set up to walk us through it, but I'll just walk you through it manually at the moment. So the first thing we'll do is we'll enter in our assets. And the worksheet supports 12 assets. To see more of them, you just have to hit the standard or the advanced view button. So let's assume that our client is disposing of land and they're disposing of building. So I'm just going to just change my title so I can follow my assets through. I can then decide whether or not the assets are passive or active assets. That's important for things such as recapture, terminal loss, or also how it will impact the AII of the following year. So let's just leave them as passive assets. We'll assume it's been used as a rental property. We can then identify whether or not the assets are depreciable for tax purposes. So we can choose true or false. We'll say that the land is not depreciable, but the building is. So I'll mark that as true. We can then go ahead and enter in the proceeds for both the land and the building. So I'll include both proceeds and an ACB. As a reminder, when titles are in brackets, we're going to want to put in a negative number. If we put in a positive number, the error guide is going to let us know that we need to change the way it's been entered. All right, so we now have our capital gain here on the disposition of both assets. And below, we can put in any recapture and terminal loss based on the UCC. So let's go to the building and let's assume that the building had $75,000 of UCC. You're going to notice that the $25,000 recapture is automatically going to calculate for us. And if we have a more complex scenario where we're thinking about donating the qualifying securities, if they are qualifying securities, you can just identify the donation type. You can put the amount of the donation, and the worksheet is going to handle all the capital gains, all the recapture. It's going to add any applicable balances to the CVA and also include all the donation deduction. It's all going to flow through the worksheet. So even in this scenario where we have just capital gains and recapture, if I just go back to the taxable income section at the top of the worksheet, you're going to be able to see there's our net capital gain on the passive assets. You're going to see down up a little bit higher, there's our recapture on the investment assets. So it's all built directly into the solution, solving your taxable income, and then down in the corporate tax section, again, providing you the full tax output. And if you go to the carry forwards, you'll see all your NERDTH, ERDTH, GRIP, and so on, and CDA. Everything has been updated to reflect the transactions you put in the worksheet. So similar to the first worksheet I showed you, we have two tabs here, which are going to give you charts that's going to highlight the results for you. So we have a T2 cash and we also have a T2 income. So again, a great way to show your clients a breakdown of those scenarios. We did a multi-year plan here, but you can also use this worksheet. Of course, if you were disposing of assets, you can look at different asset prices and see the impact of the tax bill. So a few popular ways clients like to use this worksheet is, again, this is the time of year clients might be asking, what is their tax bill going to be? You can just drop in the numbers and send them a chart or the report to say, this is how much you should expect to pay in taxes. Sometimes we want to summarize all the corporations in one worksheet. So OpCo, HoldCo, SubCo, we can put everyone together. We can also use this for compliance purposes. So sometimes we might have a junior staff prepare the file, and what we can have is the manager or maybe the junior staff fill out the worksheet as well and ensure all the numbers agree to the T2. So a lot of really cool ways to use this worksheet. And as we get to more complex worksheets, such as salary versus dividend optimization, understanding how to use the personal tax scenario and corporate tax scenario worksheets are extremely helpful because the exact same interface is in those more complex solutions. All right. So last thing I'm going to show you, but if there's any questions, please let me know and I will stick around as well, is that inside your TTI folder, you will see that there is another worksheet called Corporate and Personal Tax Summary. And I'm just going to highlight it for you on the screen. Just be aware that if you are working in a situation where you want to summarize corporations and individuals together and you want to run a lot of unique scenarios, you can use this solution as opposed to using the other two solutions I showed you. They're exactly the same. The only difference is that everything is combined into one workbook. So the T2 tab here is just like corporate tax scenario, and the T1 base and the T1 marginal tabs here are just like personal tax scenario. So nothing is integrated. Nothing's going to connect between the corporation and the individuals. So you can go ahead and use simple equals formulas in Excel if you want to pull numbers from one to the other. Salary dividend optimization brings it all together. But this is a really handy solution for running scenarios and keeping all your data together in one place for an entire entity or corporate group. All right, so as promised, I was trying to keep it to 20 to 25 minutes, and I'll stick around for another 5 to 10 minutes if anyone has any questions. But if you are jumping right off, thanks so much for attending today. And if you have any questions, please let us know. You can shoot us an email at support@taxtemplates.ca, or if you'd like to chat with me, my email is jay@taxtemplates.ca. So thanks very much, and everyone have a great day. And hopefully we'll see you on Thursday for salary dividend optimization. Yeah, good question. So in personal tax scenario, if you are looking to dispose of capital assets, we do have a similar section as well. And that's where we can enter in the capital gains exemption and other details. In order to get there, you're just going to hit the standard view or the advanced view. If you hit the advanced view, you're going to be able to see all the detail that you're looking for. So if I hit advanced view, and what it's going to be is right above the contributions and carry forward. So between dependents and contributions and carry forwards, that's where you can find all of that additional detail. So right now, what the worksheet is doing, it's hiding all of those applicable rows so we can see them. Yeah. The purpose of using these different view buttons of course, with the TTI worksheet is we're trying to balance the complexity of Canada's tax system while also making the worksheets as easy to use as possible. So if I just jump to contributions and carry forwards, I can scroll up, or if you want to use the blue links directly in the worksheet. So for example, qualified small business corporation shares, I'll make that a little bit bigger. You can just go ahead, click the link, and this will take us to the section where you can fill in the eligible assets, what might be applicable, and so on. Yeah. And if you do have a capital gains reserve, that's going to apply. The capital gains reserves are linked up by asset, so it's going to do all that work for you as well. So if you're going to run a multi-year plan, like a 5-year plan for your client, we're going to do all the capital gains reserve too. Yep, so another question about more than one dependent. So if you have more than one dependent, again, just hit the standard or advanced view. If I go to dependent section, you'll see that we're going to support up to 6 dependents in the worksheet. So you can go ahead and use each one. Okay, so good question. So if someone asked the question, what happens if the government changes the legislation, like maybe an increase to the capital gains rate, and I've already filled in all my data and I want to keep working with the scenario, what do I do? Well, inside TTI's worksheet, at the very top, we have this button that says import values from another worksheet. So what you're able to do is open up the brand new TTI worksheet, hit import values from another worksheet. You'll just select the worksheet that you were working on, and it will bring forward all the data automatically for you. The process takes maybe about 30 seconds, really easy to do. Just hit the import button, you click OK, and off you go. Yep, so all of the 2022 rates are built into TTI solutions. So if you are running a scenario for 21 versus 2022 for your client and you want to see the impact between the different years, the results will be there for you. This certainly matters more for some provinces than other. For example, we do have inflation's a little bit higher, so some of that indexation, it matters. Provinces such as Newfoundland, they have really increased their tax rates from 2022 to 2021. So that would be something specific to look at. And a few other provinces like, Saskatchewan has different dividend tax credits, and I'll use Saskatchewan. It's a great example. Over the next several years, they're changing their dividend tax credits and their SPD limits. They're built into the worksheet. So if you're doing a multi-year plan for someone in Saskatchewan, you're going to be able to see the impact of maybe taking additional income in 1 year via dividends versus other years. Yep, so if they are married or common law, all we'll do, and we can just run this scenario, we go married or common law, you will see that the worksheet is automatically going to use scenario 1 for taxpayer 1 and go spouse of taxpayer 1 here as well. You'll notice that because they're married, they need to have the same year in and such. So the error guide is going to prompt us if there's anything that we need to fix before we get started with our scenario. And yeah, you just have to fill in the information for both, and that'll do all the pension splitting and transfer of dividends and donations, all those things that you would expect. Yep, if you want to provide us with your logo, just send it to support@taxtemplates.ca, support@taxtemplates.ca. Also great where to send your questions to, and one of my colleagues will get back to you. And if it's more complex, it might get forwarded to me, so you might hear from me. All right, well, if there's no further questions, thanks again for attending today. If there's any other questions that come as you jump into solution, please let us know. And again, hopefully we'll see you later this week for salary dividend optimization. Have yourself a great day. Thank you.